Hey everybody, my name is Brandon from thestockstunes.com, and today I want to talk about SOFI stock, ticker symbol SOFI, and how it is up over 30% in the past week. So now let's get started. So here we are in Google, and here's a 1 week view of SOFI stock charts here, and we can see what a nice week SOFI has had, up over 30% in the last week. However, as we all know, looking at only one time point for anything is not giving us the full picture of the story. When we look at a 1 month view here, we can see that SOFI is pretty much flat for the month, and if we look at a 6 month view here, we can see we're actually down 23%, and if we look at a 1 year view, we can see that we are off more than 32% for the past year. But first things first, the first question is, why are we seeing such a great move of 30% in the last week? A lot of that may be because the overall stock market was up in the past few days, as we can see here, but some of this upwards move may be in anticipation for a good earnings report, which we definitely got. If we look at the 1 day view of the charts here, when the earnings report was released, SOFI gapped up to nearly $13. However, over the course of the day, we actually lost a lot of that $13 and finished the day more than 10% off its intraday high. This is classic good news, bad price action here, which may be a little concerning for short-term traders in the name. Even with the good news of the earnings report, which we'll talk about in the next section of the video, we still fell more than 10% intraday, and the reason for this 10% drop from its highs today may be similar to why SOFI has dropped more than 20% in the past 6 months. And to talk about why SOFI has dropped more than 20% in the last 6 months, I want to focus on this time period here between the end of December and the beginning of January, where we really broke this $14 support level that has kept the stock up for a long time. We'll talk more about the technical chart indicators in the last section of the video, but this breakdown in the charts here corresponds to a massive breakout of interest rates, which I pulled up in this tab here. We can see here, this is a 10-year note, and we can see again in late December, we accelerated out of this 1.5% level upwards. As I've mentioned in previous videos, rising interest rates affect stock prices, and just recently on the 2nd of March, Federal Chair Jerome Powell, testifying on Capitol Hill, continues to suggest that interest rates will rise in attempts to control inflation. Because interest rates may be a leading cause to the decline that we saw in the past 6 months of SOFI stock, news that Federal Chair Jerome Powell will continue raising interest rates should definitely be on the minds of people who are interested in investing in a growth stock like SOFI. But with that said, rising interest rates should also be actually a good thing for financial stocks like SOFI. Rising interest rates means that financial companies are now able to charge more for the money that they lend to individuals. In other words, they're able to charge higher interest rates on the loans that they give out. This is why higher interest rates should actually be good for financial stocks such as SOFI, and that is also something investors should consider if they are interested in SOFI. So after talking about how the macro story of rising interest rates may both be a good thing and a bad thing for a growth stock like SOFI, now let's head on over to SOFI's earnings report to talk about how SOFI is doing as a business. So here we are in SOFI's most recent earnings report, and we can see that they give us a look at the quarter ending on December 31st, 2021, which is this column here, and that is compared to a year-over-year view for the same quarter in 2020, which is this column over here. So firstly, SOFI's breakdown is a little confusing here. Basically, SOFI has a business that earns income from the interest that they collect from something like loans, which is shown in this block of the earnings report here. So all of these businesses, loans, securitizations, and related party notes, all of these things generate interest income. And the total of that interest income is shown in this line here. Now, of course, this interest income isn't exactly free. We have to pay some money to turn on the lights and everything. So the cost to make this interest income here is shown in this block here. So by taking the amount of money that we gained from our interest income and subtracting it by the cost it takes to make that interest income is how we get this net interest income down here. So this is the first part of SOFI's business, and we can see here that we are actually doing quite well year over year, basically doubling our net interest income from $38 million in 2020 to $76 million for the last quarter of 2021, and that is definitely a great doubling of net interest income year over year, and that is definitely a good thing for investors to see. So again, there's two parts of SoFi's business that makes money. That was the interest income part of things, and now we're going to talk about the non-interest income business that SoFi has that is still generating income. This business, which they call non-interest income, is the non-interest related incomes that they gain. For example, if you apply for a loan and if you pay a fee to originate that loan, then that is plotted down into this section of the earnings report here. So by adding the amount of interest income that we got from this line over here, adding it to the total non-interest income that we got from this line here is how we get our total net revenues for both of SoFi's businesses. And if we look, we are still actually seeing a very good increase from this $171 million that we got in 2020, increasing to about $285 million in 2021, an increase of over 65%. And that is definitely a good thing and very impressive for shareholders of SoFi. However, unfortunately, the song does not end there for SoFi. We still have to talk about operating expenses, which is this block on the earnings report over here. We can see here for really every single category, technology and product development, sales and marketing, cost of operations, and general administrative, all of these expenses are ticking up year over year. And obviously that carries down to our net loss here, which is shown in this line of the earnings report. We can see in this line of the earnings report that the net loss is actually growing. The amount of money that we are actually losing is increasing out of the business from this $82 million that we are losing in 2020 to this $111 million that we're losing in 2021. And that is not really the best thing in this market environment. Investors need to keep a watchful eye on this growth of net loss. Companies need to make net profits so that they can return money to shareholders. But by operating at a net loss, investors are inherently taking the risk that the company may never become actually profitable. And a business that does not make money for a long time is not really a business. So again, investors need to pay attention to make sure that SoFi does not operate at a net loss for too long. But even though this is not really what investors want to see, this is still quite common for growth stocks. Growth stocks are really trying to pay for growth, which is why SoFi may be willing to operate at a net loss here in order to gain market share, so that when they do have the market share that they want, they can now start cutting back on these operating expenses to hopefully gain profitability. So after talking about SoFi's earnings report, the great growth rate that we're seeing in revenues with the caution of the net loss, now let's head on over to SoFi's trading charts to see if there's a level or two to buy SoFi if we want to buy SoFi. So here we are in SoFi's trading charts here, and looking a little bit at the past, we can see that we had a huge trading range between this $14 support level down here to this $28 resistance level up here, before we broke this $14 support level and breaking into a downwards trend here. If we zoom on in a little bit, we can see that our downwards trend continued until we hit this $9 level on a dime before running up, likely in anticipation for a strong earnings report, which we saw today. So firstly here, as I mentioned earlier in the video, this is great news with the earnings report today, but bad price action as we open the day up at the top of this candle before dropping 10% intraday to close at the lows of the day, and that is definitely not a bullish sign for investors. I think there is a resistance level forming here around this $13 resistance level made from the tops of this candle today and the tops of these candles over here, and maybe a weak support level forming around the $11 level over here from the bottoms of this candle over here and the top of these candles over here. I think because of the bad price action that we saw today, that we could definitely see this $11 support level come into play again. And honestly, because we are still in a very hard downtrend, we could see this $9 again in the near future. Continuing downwards, I think, is the more likely scenario. However, we are in incredibly volatile markets at the moment. In addition, the macro environment has gotten a little bit more clear actually, with the Federal Reserve telegraphing what they are planning on doing today. So if overall markets continue higher, then SoFi may be along for the ride higher as well. But we would first have to break this $13 support level before breaking our next $14 support and resistance level made from the tops and bottoms of these candles over here. So for me, if I was looking to put money into work into SoFi, then I would be looking for first this $11 level that we saw previously, and if the downtrend continues, then the next level where I'll be looking to put money to work is around this $9 level down here. Looking at the MACD charts, which is this chart here, we can see that our blue line, our short-term momentum, actually just crossed over our orange line long-term momentum, which is actually a bullish sign and could cause some algorithms to start buying SOFI. Next, looking at the RSI chart, which is this chart here, we can see that our relative strength index is floating in between the oversold territory down here and the overbought territory up here. So because we are neither oversold nor overbought, it's not really telling me much at the moment. So that was my review on SOFI stock. Let me know what you thought about it in the comment section down below. If you have any questions or if you caught any mistakes, also drop me a comment down below. If you liked the video, please like the video. If you haven't subscribed yet, please subscribe. And as always, thanks for watching and I hope you have a great day.